recording has begun. It is December 28th, 2015. This is Frank, Clueless 8, founder trader, Clueless 8 Trading. This is a free training sessions to understanding the bar charts, also known as the algorithmic high frequency trading charts. That's what I call it. That's subscribed by Quad, the service that I use, one of the platforms that I use for my stock quotes and for this type of charting that I do. Among the 4 different platforms that I use, which you all are familiar with, one is Thinkorswim, one is TradingView.com, one is FreeStockChart.com, and then of course this one. Full disclosure, this is purely for financial education and not for any solicitation or advice. Very, very clear about that. That's what a subscription service is all about. You need a broker, you need a financial advisor, you got to do it on your own, and good luck. All right. So let me kick off by making sure that everyone has full view of this screen, has full view. I'm going to switch monitors. I'm looking at 6 monitors on this CPU. So I'm just going to check and see. Okay, there we go. Can everyone see this screen now? It just switched.
Nothing switched.
Okay, it switched now. It takes a second to refresh your screen.
There we go.
Right? You see that?
Yes.
There's lovely Google.
You see it?
Okay, you can see it?
Yes.
Okay, great. Okay, always, you can see it. Mark can see it. Ciara can see that. That's great. Because I'm going to be switching in between these screens as we go through this training session tonight. So it's monitor 3 and back to monitor 4. It's going to take about 10 seconds to refresh. Now you're back to the main market screen, which is the S&P 500. Yes?
Yes.
Okay, good. And people who have the headsets, just you can respond directly by saying yes. It makes life easier for me instead of having me to look at that tiny little font, typeset and font on the GoToMeeting thing and trying to read what Nader or Always Learning and anyone's writing. Bear with me 1 second. Okay. All right. Are we ready to go?
Yes.
Anyone else? Okay, great. So first and foremost, let me start off with the most simplistic stuff. There's a lot of stuff that you can put on the Algo HFT screens, and I'm just going to go through the basics tonight. And what I use on a consistent basis on reading the charts. Somebody just walked in. And Wei Xing, did you just walk in? Wei Xing, can you just, as you saw the introductory message, you have to say hello or you have to say, yes, I'm in. The key thing about this Algo HFT charts has to do with your eyes, just like any other chart reading. I don't read off a script, so I can't really walk you through 1, 2, 3, 4 on these things. When I do these charts, I always put arrows. I always put rectangular boxes or whatever for the gaps and things like that. But the most simple thing that you have to look at when you're looking at these charts, first of all, is the setup. Actually, let me just rewind back. Who hasn't subscribed to these quad charts? Because if you don't have it in front of you, you're not going to get head or tail out of what I'm doing right now. So I need people to step up and say, okay, I'm nuts. I'll send you the link. You have to call the company. You have to mention you're referred by Clueless Day Trading, and they'll give you a free trial subscription for a bunch of days. And if you would be idiotic enough not to pick it up and run with it, because I believe the monthly charges are around $100 to $120. I pay more than $400 a month, and I've been doing it for years and years for using this service. But I told the gentleman, his name is Keith Savitz, I believe he's one of the founders of Quad, that I was going to refer him a bunch of people, and that to give them a discount. So he agreed to do that because it's about numbers. So if you do not have the quad charting and you're being stingy enough because you think you're going to save yourself $120 and not make $1,200, 10 times more on any particular trade by not using them, then I will be very honest with you. That is plain stupid. I want a full disclaimer. I get nothing out of this. My monthly subscription doesn't go down because you guys are signing up. What it does do for all of you is that it makes you understand my precision work that I keep on delivering day after day after day, right or wrong, more right than wrong. And I don't know what charting program, what some people are using, but if you think that you'll go ahead and just, that you'll be able to just navigate this treacherous market, which is a very profitable market too, mind you, by simply winging it and by following my drawings and my arrows and all the different things that I do, my resistance levels, my support levels, and things that I do in all the different colors, then you're very mistakenly, you're very misguided. I'll be very honest with you. So I need to know before I go into this, and you can type in or just say it exactly who has the quad screen in front of them as we speak, or has subscribed to it so they can go back to it and set it up the way I'm going to teach people to set it up.
I'm subscribed to that one.
Okay, one person at a time. Go ahead. Tom, you're in, right?
I have it. I just don't have it turned on at the moment.
No problem. Okay, I have Tom Gans. Who else?
I got it.
Mark has it. Mark Foster.
Yes, and I have it up right now.
Okay, great. Go ahead.
I have it. Always learning.
Excellent. Always learning and Clueless Say, they're like very similar because we're always learning and we're clueless. Okay. All right. Fish Eyes, Jim?
Yep, I got it.
Okay, Jim has it. Savvy, you there? What happened to Savvy? He was there. He didn't come in?
saw his name in the chat room.
Yeah, I know. He was there. Because he needs to be. He's the one who, who was actually one of the first ones to join in. Hold on one second. So the rest of you who don't have it, Wishing, are you there? Wishing's about to get booted. Wishing, are you there? Let me send. Just bear with me 1 second. I'm just trying to get in touch with Savvy. Hold on. He's important. Everyone stay pat. I'll be back in about 15 seconds. Okay. I believe GOS. Are you in? Sorry about the delay. It's not me. I'm just trying to accommodate a lot of people so everyone gets the full blast of this session.
Check, check. Hey, guys.
Yeah, Savvy, you're in?
Yes, sir. Yes, sir.
Okay, thank you. Is GOS gone tomorrow? GOS, do you hear us? Okay, forget it. All right. So first and foremost, when you are setting up the screen on this particular, on these Algo HFT charts, first we're going to talk about the setup, then we're going to talk about what you need to look at, and then we're going to talk a little bit about the complexities of how these charts move versus what you're used to in other platforms, because they do move somewhat differently than others, even though the parameters are always the same. In other words, the numbers are not going to change. If the market's going to be down 100, this thing is going to be down 100. And so, I mean, the parameters of what the market does, because the underlying derivative of any chart is what? is the market. So when we're looking at the S&P 500, the underlying derivative is always the S&P 500 and what the SPX futures are doing. That is the key underlying derivative of any movement that happens in the market that either makes or breaks you on any trade. Either keeps you in the trade, kicks you out of the bus, or you're too late in the game, you come in too late, and whatever the case may be. So first we're going to talk about the setup. So the way you set it up is when you put the chart up there, you get these, you just get the plain, chart, just the candles, all these candles. The candles make sense, but like I said, on any single chart, unless you put them in a certain, what's the word I'm looking for? Unless you compartmentalize and package the product. The raw product are these candles, all these candles, red, green, that either make you miserable or it makes you happy, right? That's what these candles are. But that's the unfinished raw product. That's going up and down because of the market. But in order to package the product where you can actually see what the levels are and what you think the predictive levels are, what you think might happen within the next day or the day after or the next 15 minutes or the next hour, whatever the case may be, whatever time horizon you're doing that particular trade in, you have to package it. That packaging comes in the form of different parameters that you can put on. I use some basic ones. Sometimes in my own self, I use some pretty complicated ones. I'm not going to get into that today. This is level 1 training. The level 2, the level 3 training, you need about 3 or 4 sessions of this to get a complete understanding, and then comes the real test in real battle, in real-time market sessions where you use it. It doesn't take that long, because the reason why it doesn't take that, it took me a while because nobody taught me. So I was raw. I learned it myself. Self-taught people are the most successful people in the world because we are entrepreneurs. But what I'm doing is I'm taking the time and the energy to basically giving you that leg up so that you can self-teach yourself, but at least know what you're doing. So, saying all that, you hit study up here when you put this chart up. On Quad, you have to have the platform first. You hit study. There. And I will tell you that you will need a reasonably powerful computer to run the Quad platform. Very, very key. Because the Quad platform absorbs a lot of working memory, RAM, random access memory, right? So because you have a lot of data coming in on the platform in the form of stock codes and stuff, so you need to have some sort of reasonably powerful computer, which are cheap as hell these days. And if somebody needs help in figuring out what systems they should use and what type of computers they can buy from Amazon or Best Buy or whatever, or HP. I use HP primarily, or Dell, whatever the case, but I use HP. I'm more than happy to offer that information for free so that you have a leg up. Okay? Because power is important, not just mental power, physical power, or technological power in the form of the power, computers that you're using. Okay. Because in the daytime, these charts are very sticky. What it means is when you're trying to move and draw lines, they're not that easy to draw. And guys who are tech guys out there, they will know very well why. Because there's so much data coming in from the New York Stock Exchange, the NASDAQ, the Russell 2000, you name it, the feed, that it slows down the system. Just want to warn people on that. Think about what I do. I try to draw these things in real time even though some of them are pre-drawn, while I'm doing my stuff and then delivering it to all of you so you guys can act on it as quickly as possible, as much in real time. So it's quite a bit of work, mind you. Okay. So anyway, so number one, you need to have the physical power. You need to have a reasonably powerful desktop, which would be good. If you're standstill in an office or whatever, and you have a desktop reasonably powerful, you do that. If you have a laptop that you're using, then have a reasonably good one. Spending an extra $1,000, $500, $400, believe me, pays the bills in tenfold. Believe me when I tell you that. All right. So then you hit study, and there's so many of these things here. And you know what? You can jam this chart up the, like we say in New York, up the wazoo, okay, with all these different things. There is accumulation distribution index, ADX directional movement index, which is pretty good. Alligator, have no idea what it is. Arun indicator, I know it. Average true range, awesome oscillator, Bollinger Bands, very important. In fact, the Bollinger Band should be here. Percentage B, don't worry about it. Bad bandwidth, don't worry about it. Chalk and volatility, that's level 2 teaching. The color bars, I have no idea what it is. Commodity channel index, COT, and it goes on and on and on and on. So if you want to be a rocket scientist and you want to impress your neighbor or your wife or your husband or your dog or your cat on how colorful your charts look, then feel free to put like 30 of these in there. It's not going to do anything for you, just so you know that. Because simplicity is the key to trading. Just the way in life, simplicity. You need to drive the car and you need to know all the instruments that are in front of you. So the more you have it in front, the more instrument panels that you have in front, you're going to crash the car. So saying all that, these are the ones that I generally use, as you know, as you all know. I use the Bollinger Bands. It gives me an idea where we are in the range. I use these lines here known as the pivot. It's known as PPL right there. Pivot points automatically put on there when I click that. Well, it's already there. Then I use the stochastics as the internal driver to understand and read. And that's where the hard part comes in. And we're going to cover that on basic terms tonight. The stochastics, whether they get deeply oversold in that sub 20 range, below 20, it's the same old game. It's a 2070 or 2080 game. What does it mean? It simply means that, generally speaking, if you fall below 20, you buy, it's oversold. And when you rise above 70 or 80, you're pretty much getting quite overbought for whatever time frame you're looking at. This is an hourly time frame, right? So hourly, right there. So it depends on what time frame you're looking at. And that gets into some more advanced stuff, because every different time frame you have to massage and you have to look at, depending on what the type of market that's happening out there. That is not going to come easy. That's why you'll still need me. Because by the time you don't need me and my service, then you're going to basically fly high and fall lower. I'm half kidding. It's true. Okay? Because the fact is, understanding the earthquakes that happen in the financial markets on a daily basis, on a weekly basis, is far beyond charts. That comes from some deep understanding and, of course, a significant amount, as you all know, of analysis that goes on, which I call the game theory analysis, which is exactly what it is. So that's a different, I've covered that quite extensively in my video cast, but, we'll talk about that more as we move along on these sessions. So let's stick to it. So you got the pivot lines. These are the lines. The green lines are the resistances. If somebody doesn't understand resistance, I'm sure all of you do, then I'm not going to help you with that. You're going to read on your own. You're going to teach yourself on that. Resistance is simply where you're going to hit the wall. Simple. Then you have this line here, right there. This light kind of faint line that you're looking at. Here's the green lines. This is R3, R2. That's resistance 3, resistance 2, resistance 1. Then you get this line here. That's the pivot line. Now, what is a pivot? Google it. That's the line you generally pivot off. You use that as a pivot to go higher, or it acts as a somewhat of a resistance. Generally, a pivot line, under the definition of Investopedia, which all of you should have as your trading Bible for technical terms, okay? A pivot line is, I'm going to give you the actual definition in a second, is extremely critical. Bear with me. And by the way, this is a very interactive session, so feel free to ask me anything at any given time. The definition of a pivot point is one second. Pivot points to identify critical support or resistance levels. Pivots are also frequently used in the Forex market, can be an extremely useful tool for range-bound traders, which the market is. It's a range-bound market. Which reminds me one thing. Take a minute to read a very important article that I put out there earlier on as I was having my little downtime before this session. And it says here that the article that I put out there 1 hour ago, it says these are the pros and cons of stocks going nowhere. It doesn't matter if stocks go nowhere. If they're trading between a range, as we do range trading repeatedly, as I constantly do range trading, buy these certain technical lows, sell these technical highs, blah, 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 it's still money. Because honestly, you don't need to have a runaway market on one end or a complete crashing market on the other side, because those happen once in a while. More frequently than not these days, we know that. But we don't need that type. We can just range trade because we're not married to the market. We don't sleep next to the market. We sleep next to our spouses. In our case, spouses, cats, and dogs. Just kidding. So anyway, so the bottom line is that you don't need, very key thing to understand, that you don't need a bull market or a bear market to make money. We're long short, which I constantly keep on showing. Short on Thursday, keep on saying Friday, but Thursday, covered the short, make a decent sum, go long, then go short again. But in order to do that, you need these charts. That is the key thing here. You have to recalibrate your brain. If you do not recalibrate your brain, for God's sakes, you are finished. 2016 will be a nightmare. 2015 was a tester. It was a sampler of what volatility was. I remember in 2014, end of 2014, a couple of months into my service, I said, it's going to be the volatility. I even started something called the volatility campaign, right? 2016 is make your head spin like nobody's business. If you think that you're just going to sleep and, oh yeah, it's just going to be a one-way runaway train, you are finished. That's the reason why these idiots on the media and stuff can't figure out why the markets do what they do. So if you want to be one of them, then fine. Just turn on CNBC and just hold your TV and just sit there. If you want to be productive, then you have to have all the tools in your hand and harness volatility. Period. 2016 is going to be so volatile, it's not even going to be funny. And I think I am going to flourish. I know I'm going to flourish because I have no choice. When you have no choice, you win. When you have too many choices, you lose. I made that term up. Write it down. So saying all that, so pivot points are a point of rotation. That's the best way I can put it. It's a point of rotation. The input price is to calculate the pivot, all the good stuff. Okay? So pivots are very important. And moving that back, actually closing it out. Okay. So this is your pivot point right there. Right there. This line here. That automatically comes when you input the pivot of your study right there. Come on. When you click pivot, not the moving, the pivot points. So good. Then you have this red line here, and that's why you need a bigger screen. Okay, real simple stuff. You got a powerful computer, get a 17-inch one. Don't be looking at a 14-inch Mac trying to figure out everything. Well, those are good too, but still. All right. So then you have that. That's resistance 1. I'm sorry, support 1. Then you have this red line, support 2, and then you have support 3. Now those are automatically transplanted on the screen when you hit the pivots, right? When you hit the add the pivots on your screen. So that's number 2. So you have Bollingers that you put, then you put the pivots. Then you add stochastics. Now stochastics are very easy to read after the fact. They are not easy to read while the market is in full swing, because these lines don't look so beautifully straight up till 8 in the evening or 7 in the evening when Frank is sitting here spending his time showing all this stuff. Because in the middle of the day, they didn't look like this. So that's where you have to put your own projections out. And over time, you develop an instinct. Life and trading is about instincts. It's what you go with your gut feeling. The more I do this, the more difficulties I run into, the more crappy I feel before a large trade is done, and I go against the grain where not many people agree with me, is what makes me a stronger and more powerful trader and individual. It's the same thing with life. The more they say no, you say yes. So it's the same thing with this. So bottom line is, when this is zigzagging around like this, eventually it's going to get here, one way or the other. Things always get overbought. But things can also stay oversold. We know that. This was a nice, beautiful multiple bottom, right? But it happened over 4 days or 3 days, from the 18th till the 20, not 18th, from the 21st till almost the 23rd. You can see that right there, right there. Chop, chop, chop. You can still make money off this. Not easy, but you can still do it if you know how to use these shorts. So you had this multiple the basing pattern, and then the takeoff. Now remember, there's an old saying in the business that the longer it takes to base, the higher things go. Except there's a fundamental difference. What's 24 to 48 hours of basing? In the old days, when they said it longer to base, in other words, the bottoming process, right? They talked about 24 days. Okay, they talked about 24 days. Now it's happening in 24 hours. So you have to start to look at these stochastics. They're oversold. They're going to bounce and they bounce and they move down a little bit. People freak out. I tell people to stay on the trade, on the trade, do all the stuff, but I am tracking this. And of course, mount the charts before I go ahead and tell them what to do, tell all you guys to do what you need to do. Here, for example, we had a reversal hammer. You could see that right there. And right there, that's a massive reversal hammer off the 1990 level, back around the 14th of November, right? No, December. Wow. Middle of December. Remember, it's always the middle of the month, right? We've always said that. So look what happened. Now, trying to understand the stochastic, there's a percentage D line and the percentage K line. I'm not going to get into that today because it's going to drive you nuts. All right? You have to also know how these lines behave. Over time, as you use Quad and use the Algo HFT charts, the bar charts, you're going to start to see how they move. The more you see how they move during the actual market day, not like at 7, 8 in the evening while you're pleasantly listening to my lovely voice, that's when you become proficient in managing your trades. And then when I put my stuff out and then I update my stuff again every couple of hours, then you say, man, that makes sense. That makes total sense. That makes total sense. Now, it's not making that much sense because you're not seeing this in motion. Now, if you just rely on this for your trading, well, that's fine. But I suggest that you also look at your other stuff too. Because these stochastic movements between oversold and overbought tend to happen rather quickly versus what happens on TradingView.com, for example. Or what happens on StockCharts.com. That's the other one that I use. I'm sorry, FreeStockCharts.com. And I've noticed that they have a lag. So you have to kind of mesh them in and say, okay, I'm going to use, I'm going to see which one's getting oversold faster, which one's getting oversold lower. Now remember one thing, see, before I go any further. My job in this subscription service, for however long that I want to keep this open, to be honest with you, because if it becomes too much of a pain in the butt, I'm just going to shut it down, is the fact that is to decipher all that and put out the trade alerts and keep on putting out my comments on whether or not I'm sticking with the trade, not sticking with the trade, whether people should stick with the trade, add or not add. So you don't have to really worry yourself too much in thinking, oh my God, I have to analyze all this stuff, Eventually it'll become second nature. It'll take time. But at least you'll see the dynamics at work while you're looking at my charts. That's the whole goal. The deep thinking and all the game theory stuff, leave it to me for now. In fact, leave it to me because I think I can do it better than almost all of you out there. And not just all of you, I'm sure better than most of the guys out there on StockTwits or the hedge fund community or anyone out there. I've been asked many times to run a hedge fund. I won't do that because I don't want to deal with clients. Simple. So let's get back to this for a second. Okay. You have the stochastics. So that's how you set the chart in place. You add the stochastics, you go into study, you go down, use the fast stochastic. You can always use slow stochastics too. But the slow stochastics sometimes, the slow stochastics are equally good, but if you're looking for a more momentum type of investing like Google or Amazon or Netflix, things like that, the Teslas of the world, that type of stuff, Regenerons, fast moving stocks, then definitively use the fast stochastics. Now the slow stochastics, I use them on my own. I don't show them as much. But thinking about it, I should show them more. Okay? And slow stochastic are the S for slow, stow, right? 1433. So you notice how the slow stochastics are not overbought on the same frame on the 60-minute, 1 hour charts, which are primarily the trading charts. And you can see that right there. Also keep in mind that the fast stochastics got deeply oversold at 4.76. You can see that right there on the right hand side, right at 4.5 or 4.76, and allowed an entry point on a reversal candle, which I'll get into in a few minutes, which allowed me to say close my shorts or 95% sold. That's as good as saying like almost all sold, right? And S&P puts that were bought on the shortened Thursday session. You all know that. And I was, in a way, motivating and mocking people, because part of motivation is shaming. You have to be ashamed when you don't do something that's so obvious. I shame myself for doing stupid things sometimes. So the fact is, when I say to people, like the majority just sat there, it's true. They did nothing. I didn't get that much response back, even though there were people in the room and stuff on Thursday. When I was seeing these things at overbought levels out here, not on just this chart, on many other charts, right? Right there, you can see that. Overbought as much as you can get. Up there in the almost in the 100 range, right there in the stochastic, on the fast stochastic. Right there. Can everyone see this?
Yes.
There you go. Okay, so I'm trying to put it up here. Hold on. Like I said, it's pretty sticky because these are very a powerful charts, so to take up a lot of memory. Anyway, so you can see that right there. Let me just get a drawing. That's better. There you go. Why is it not drawing either? One second. Okay, so why? Oh, it's because it's black. 1 second. Change the color. Choose pen. Yellow. There you go. So right now you can see, it's above 90. I don't mess around when things get above 90 or 100. I can see the momentum climbing. Remember, it was at 90 when the market was at 2040. It rose to 2068. That's 120 Dow points higher. It stayed overbought. But what kept me in the game was you could have to start to see the shape and the direction of these stochastic lines. And you can use the slow stochastics. Like I said, I'm going to start using them for all of you to see, because I look at them on my own, showing that there was no chance of any type of major pullback. So like they say, overbought levels can stay overbought. Look what happened here. It stayed overbought for a good 4 days, while the market climbed from here to here. Let me stop myself for a second here. The key thing about looking at any charts, including these, is visual training. It's really visual. I actually taught somebody once, prior to my training thing, how to read these charts. They still use them. They had no idea about the market or finance or anything like that. They knew 1/10 of what all you know about the market and stuff. And they still use this to trade on a sporadic basis. Unbelievable. Because they became visually adept and experts at looking at these simple indicators and saying, I'm staying with the trade, I'm not staying with the trade, I'm selling here, I'm shorting here. Are they always right, that person? No, but that person is doing fine. He's looking to make some extra money on the side, doing this. and he's doing fine. So what I'm getting at is that you have to really be visually somewhat intelligent, and it's not that hard. It really isn't. So when you look at this stochastic move here, there's a couple of things going on, and I don't want to get too complicated. This looks like there's a nice crossover about to happen right there. Let me get this 1 second. Okay, so right there, it's telling you there's a crossover about to happen. When I look at my 533 charts on my other screen as I'm seeing this market's not ready to give up yet. But things can change because the markets are not linear. Things can change tomorrow. But there's a fundamental basis and seasonality involved as to what the market's doing. And that I've covered very clearly. That this is a very strong part of the market. In fact, in the old days, they said the market's the strongest between November and April. And then comes that sell in May and go away syndrome. And you know what? It actually works. And then they say the Ides of March. March has a nice fat correction, but then the market climbs again. So what I'm getting at is from a seasonality standpoint, looking at it very short term between now and the first part of January, I think we're gonna hit those levels, the same things that I've shown, and we're gonna go through it as we go through some other charts tonight, which I've already posted. In fact, one of them that I posted today showed end of the year, first and first week in January forecast. It said it was 4 hours ago exactly on the Twitter feed. It says Algo HFT charts SPX Monday closing. That was the closing chart for Monday. Same one, this one. And it said forecast view plus forecast end of the year 2015, January 1st and 2nd week 2016. And I put arrows and stuff saying what I projected thing. Who saw it?
I did.
Who else?
I saw it.
Who else?
I saw it.
I saw it.
Who and this is like an interactive session, okay? Who did not see it? Step up and say, I didn't see it.
I didn't see it.
Okay.
I was away from my
I don't need reasons. This is not classroom stuff, you know? So fine. Who else didn't see it? Nader, did you see it? Okay, you didn't. Because I'm going to make a point here. And Nader's the best. He goes, I didn't see it. And did you say send me the link? You know, I'm going to smack you on that one. Oh, this is the best, man. I'm really going to smack you on this one. Where was it posted? So let me get straight to the point here, guys. Okay? For the people who are like, I'm really going out of my way to help people. But I'm getting a little bit sick and tired of people who are that lazy and that stupid after being with my service for months and months and months, who still don't want to step out and ask me the stupid ass questions. I swear to God, where was it posted? Nader, right now, I will kick you out and you'll never hear my voice again. I'm dead serious. What do you think, where was it posted? It was posted on the Twitter real-time feed where all my content is delivered. So if you're not tracking my real-time feed on Twitter, let's say you can't do it at work and give me that cockable excuse that you can't do it at work, but some of you guys do, which I understand. Then why can't you do it after? Because if you don't track my work, why the heck am I putting it out there? You know why I'm putting it out there? Because the majority of you guys are great. You actually spend time respecting the stuff I do, right or wrong. So Nader and Roger, don't say overlooked it. Make it a point, if you really want to make some real money, and understanding the stuff that's put out there. This is bigger than any frigging mutual fund or hedge fund or Goldman Sachs guy that you have drinks with or send your money to. I worked for mutual funds for a long time. Not for a long time, but quite a few years, my beginning part of my career. Okay, at Putnam Investments, that's second to Fidelity. So when I hear this from people, it pisses the crap out of me. where was it posted? As if you need to know that, Focus-on, because, you know, I have a column dedicated to your feed. Who gives a flying you-know-what? And you don't need to apologize to me. Apologize to yourself for being wrong most of the time. Now, seriously, I really got to vent once in a while. That's stupid. So what I'm getting at, very simply, okay, because I'm the real deal, okay, I don't care. I'm sharing the stuff that I'm putting out there that I'm using to my benefit. And then people ask me, where the heck was it posted? What the heck are you doing in my subscription? Where the heck was posted? Go subscribe to all those idiots on StockTwits who are like such geniuses and are wrong 90% of the time, because either they're like uber bearish or few of them are uber bullish. And I don't really give a hoot whether you have a column dedicated to me or a tombstone dedicated to me, honestly speaking. Seriously, man, wake up. So one of the key things is, guys, all right, ladies and gentlemen, is you have to look at the pre-market charts that I put out there, because they give you a nice indication of what the market's going to do during that day based on my feelings that day, whatever. And then you adapt that during the day with the stuff that I'm putting out there. And I'm a visual guy, right? So I'm always putting stuff out there in real time. Almost every single chart, trade alert goes out with a chart. And then at the end of the day, I put something, what I put the closing view, which I started doing. So the closing view is important because it gives you an idea. So this is key. Now look, I'm not peeved off at Focus-on, who's a very funny and interesting guy. Is the best way I'll put it. He's Canadian. What more can I expect? Okay, just kidding. My brother-in-law, he falls in the same trap. Is the fact that is the fact that not that you missed a chart or not, but if you're not tracking my most precious content that I am working so hard to deliver all through the day, okay, then you're just not going to do it. Look, all day long, I can give you stocks that go up $1, $2, and $3. I mean, come on. And make, and say, oh, I'm the greatest service in the world. I'm not trying to do that. I'm trying to put it out there so you guys can fend for yourself and make some pretty serious money. If you stick with the trade, or you don't stick with if you stick with the trade. Some of you know that very well. And I highlight, Tom Gans and Fish Eyes and a bunch of you guys at the Sienna, who's a new entrant, new member to our community. You've seen what I'm doing. Do I always stay from point A to Z, like the whole position? No. I sell along the way. Sometimes I sell a little bit early, but I try to catch as much meat in the middle. So it's very key. Focus-on. No apology needed. Just make sure that you look at all the charts. And don't never ask me where was it posted. It was posted in my closet behind my Dolce & Gabbana sweaters. How about that, okay? Which you will never afford if you don't make the real money. And no, I don't go spending thousands of dollars on things at a whim either, because I got to pay for my kids' school in one go. How about that, okay? All right, now that's out of the way. So this one, so when you look at the slow stochastic, you can see this is turning. Now this could do this, okay, and fall lower. And those are all these things we have to be careful of in the market, right? Because it never got down to that deep oversold level, which was truly a screaming buy. Once it gets towards these levels, and you heard me say this zillions of times in the Thinkorswim charts and everything. Once it falls into that zero level, or in the single digits, it's a buy. And these charts, these algo charts, are far more accurate than anything that I've used. So reading the stochastics, this one's just crossing. This one is saying, the fast stochastics is saying, for the fast traders, like, okay, we're about to get overbought. In fact, we could wake up tomorrow morning, futures up 5, we're overbought. So what does it mean? I don't want to get into trade management tonight because this is not a trade management webinar, right? So, but if you have a bunch of calls, let's say on the S&P, on the indices, with some of you I know personally, just play indices and good for you guys, okay? And you have, let's say, calls, the S&P calls, which closed around 12, which were recommended around 7 or 8, right? 8. So they're up 50%. So they open up at 15. So what are you going to do? Just sit there and say, oh, wow, I'm just going to let it run? No, you're going to take a bunch of profits. Any major gap opens have to be taken. If you're short, any major gaps lower like this, and you're up, let's say 60% on that trade overnight, just giving an example, you take it. Because the key thing is confidence. When you take a nice fat amount of green that's on your P&L, on your screen, and capitalize it and monetize it into cash that you can spend, it feels great. And then the next trade that you go into, you feel good. Now, you got to have a day trading account. That's important. I understand that part. And if you're playing with smaller amounts, less than a day trading minimum, then obviously you got to do what you need to do. You got to stay with the swing or do something. So whatever the case may be, if the market opens up tomorrow at the upper Bollinger, which is the next topic I'm going to cover, which is around 2068, call it 2070, then the market is short-term overbought. No question about it. Maybe for the next hour, because we could get a gap open 10 points higher on the S&Ps, and then the market does a 50-point pullback. Okay, let's say the market opens up and then pulls back here to test what? The downtrend line. Remember these downtrend lines that I'm going to get into in a second. Things that I draw over these charts, so it becomes something that you can act on. So a pullback to test the downtrend line is almost standard procedure. And then possibly move up if the market wants to go higher. So if you can sell the gap open, let's say you have a bunch of contracts, you sell most of them, you leave 1 or 2 runners out there. Savvy does that very well. And then that pulls back, you add more. You have to follow these charts like a hawk. And of course, I put out comments. I don't leave you guys just by tracking the charts. I mean, you guys would be done. If I just said, okay, here's the charts, good luck. You're finished. I'm serious. So the point is that I'll say add, because I'm looking at this thing here. By that time, this could be overbought at the open. And then on this minor pullback of, let's say, 80 points on the Dow, where everyone thinks is the end of the world, just like this morning, right? We could get oversold. Or at least be oversold here. So you could go like this, or you could go like this. Now, if you get down here, it's a screaming buy for mid to short-term traders. That's another day's topic. But these stochastics, the slow ones, are the ones you have to watch. And I'm going to start putting them, okay? You got to watch in order to determine whether the trend is intact on a move up towards testing these highs up here, which would be 2080 and possibly 2090. Now, talking about chart placements or things that I put on the chart. I try to make the charts as readable as possible. So you have to read, right? I'll draw a parallel with American education. I run my son goes to one of the smartest schools in America. Okay? It is. And I'm not just saying it. And it's one tough one. And the Board of Education gives them the least amount of money. Why? Because the kids are smart. So they are not in a triage situation. They are not shooting each other. They're not playing Lil Wayne in the middle of math calculus class, if they have calculus, okay? And they're not like, screaming at the teachers and abusing them. So just because the school doesn't do that, they get the least amount of funding because they're smart enough to do their own thing. Well, the same thing applies with trading and traders. You got to be smart enough to do these things where you got to use your brain cells a little bit more and not just completely rely on me. So what it comes down to is this. I draw these lines so people can see it. So you have to see, okay, why did he draw this line? It's kindergarten. It's a downtrend line. That's why it's in red. This is the second downtrend line. I just joined a bunch of multiple points. This brings me to another point. The way I draw these lines, I can't expect to teach you right away. Those things you know. I have a certain gut instincts on looking at levels and things like that. I've seen enough charts to write a book on it. And I keep on constantly learning, always learning, right? And so I drew this one based on inflection points. These are, like, what do they call it? Supply points and demand points and all that garbage. It simply means where there are sellers, where there are buyers. So by looking at this chart, I know there are sellers here. I know there are sellers here. I know there are sellers here. There are sellers here. Even though the market was going higher, there was a naked bar spinning top, which I posted a very critical chart on Thursday. I even wrote it down, and that takes time, believe me. Okay. Spinning top, naked bar. It's a spinning top. Look at that. It's a reversal hammer. It happened in the last 10 minutes of the market closing between 12:30 and 1 p.m. S&P puts that I kept on accumulating jumped up about 40% in about 10 minutes. That's algo HFT trading. Okay. And when I noticed this candle, I knew that I was going to be profitable in that tactical trade based on overbought conditions, based on a reversal hammer. And I post and go back and review it. Reviewing is key. Remember, you guys aren't even doing the work of, like, all you got to do is review. I'm doing the hard work of putting these visuals out there, powerful visuals. So you got to scroll back and see, and you'll see how the story develops. So Nader, you heard me? So that's what I'm saying. So it's not just Nader. It's not Fokusan. Okay. Nader is like too much of a princely name, like a Saudi prince name or something. Give me like 30 million, okay, right now. The thing is, it's not him, but there's so many smart members and traders that I have in the community who don't bother to look. Look what happened to my friend KG. I love the guy. Blown up. All he had to, I mean, I'm not saying all he had to do, but he could have at least looked at some of my stuff I was putting out there before he did what he did. But maybe he thought he was too smart for his britches, as they say in England. Hello. Blown up. Gone. Did I feel crappy about it? Sure I did. Because what did I do all the time? Just review my charts. Use that with your arsenal that you have out there. Because boy, do I pinpoint and I hit the market hard. Both highs and lows. So use that as a tool. But I use him as an example because I feel terrible. Because he never did. And now, sound like Trump. Blown up. Gone. Tells me trading's not for me. The worst few words that you ever hear in your life. Trading's for anyone who wants to use half the frigging brain cells they have in their head. I'm no genius. I just look at things faster. I understand patterns faster. Yes, I do have one huge advantage over other people. I do understand global economics and the crap that happens out there better than most people out there. Aside from that, nothing. My friend Tango, who lurks around, he's a great guy. Sure, he looks at my stuff and this and that. I'm not saying you're to follow me like some sort of like, you know, genius guy. I'm certainly not. Okay? But I do have a knack for identifying patterns. So why not use it? Every single person who's left the service or come and gone, which is natural with any subscription service, okay, is because they never took the time and the energy to really understand the power of these clueless day trading charts. I swear to God, that is the truth. And the ones who have, they see it. They see it. That's all I gotta say. So bottom line is, so that's it. Now the trend lines here, you got to track between the Bollingers. Careful eye on them. Look to see how these lines are turning, including the percentage D and the percentage K. During real-time hours, you're going to actually see them move up or down. They don't randomly move up or down. If you notice the wave pattern, if you notice, right? Especially with the stochastic Ks. Waves. So at this point, we're about to get overbought on the fast stochastics. You'll probably get a quick reset. Resets don't always have to be down here, mind you. Seasonality counts. We're in a pretty powerful season between now and New Year's Day. Important point. They're not going to blast this market down 700 points before New Year's. I don't think so. Times Square needs to be filled up with 500,000 people, whatever the number goes out there. Okay? And everyone needs to spend. It's important for the U.S. economy. So watch the slow stochastics, which I'm going to input. And if this slow stochastics is still climbing up, stay with the trade. Of course, you have to be selective. That's my job to put out the selective part. Today, I focused on Google and Amazon, Regeneron, things like that. Didn't go out there full blast and say buy the whole lot, because you have to be selective. Because right now what's going on is a whole bunch of fund managers are reshuffling their books to show the best stocks in their portfolios. So any type of positive catalyst that comes out to any one of those companies, it's going to ramp them higher. And don't be surprised one bit. And we're going to look at a few charts after this. That Apple turns around and runs up $2 from nowhere. Because that's what they do. Like Netflix. I called Netflix right at the lows today. And the stock started turning. So let's take a look at Netflix. So before I go anything, let me field a couple of quick questions on these things. So just to recap, you have to put the pivot lines. You have to put the pivots. You have to put the Bollinger Bands. You have to put the slow and fast stochastics. Then you have to see the dance that goes on during the day with these things moving up or down. Don't get too jittery just because you get a quick pullback like that. I know it's difficult because the trend is important. So watching the Bollingers is important. This Bollinger trend is still higher. When the Bollinger trends are lower, then the stochastics will act differently. In other words, the stochastics might be oversold, but the market just goes up and then falls back in again. So you also have to see the trend factor that's going on right now. You have to watch the candles. That takes a little bit of that's a little bit more difficult. When I see a reversal candle like this, and then I zoom in and look at a 15-minute, for example, this happened at 12:45 p.m. Can everyone see this? Yes. This was a manipulated trade. Did I know that was going to happen? Yeah, I'm a genius. I sure did. Of course I didn't. But the point was, I knew that they were going to do something of these levels. And right there, 15 minutes before the market closes, they dump a large amount of E-minis that you can see on your Thinkorswim platform. Bang. At 12:45, the S&P puts were here. They were around 10. So I was under border by probably about anywhere from 2 to 4 points. In 10 minutes, I was up 1. That's a lot. That means that 10 went to 15. 50%. Go tell, your, want to have some, real sexy cocktail chatter at your, New Year's Eve party that you guys are going to. Normally we just hang around and watch the ball drop on our TV and sit at home with our dogs. Okay. But the thing is, that's what happens. It's a 50% move on that candle. So the candle reading is key. Now that was right before Christmas Eve. That was Christmas Eve. And then this was today. So the market opened. Let me just show this. This is very important. So the market opened and it filtered down. It hit the resistance level right there on the 15 minutes. So you got to you're going to look around, obviously, you can switch the time frame around. And then you got this huge reversal candle. Can everyone see that? If you guys are not seeing this, then don't waste your time, listening to me. Do you see this reversal candle right there? I know Tom's seeing it, but I'm talking about other people. Do you you see this reversal candle? Well, what was this reversal candle? If you felt like, oh my God, those puts. The market is supposed to open down the market pre-market was down 11.5 S&P points. By the time they opened and reversed, we were only down 6. Why panic? Because if you're following the stochastics, you could see that the stochastics hit the lower base, which was around 20, right there, whatever, 20 something, 25, and then failed. So you had to have some thing that I'm going to stick with that trade. I stuck with the trade because if you sold here, you would have made just a few points on those S&P puts. You got kicked out of the train. Then the market fell. That's what algos do. That's why these charts are so important. Because what it did was it went up to the pivot. This is the pivot line, this yellow line right there, right there. You see this line? Open your eyes. Let your eyes talk to your brain right now. Okay? Please, please. So it hit the pivot right there. Right there, this line. 1 second. That's the pivot line. I can't get any more simpler than this. Right there, the yellow line. It hit the pivot. It failed. If you can go over the pivot, rule number 1, if you can pivot off the pivot, that means it's going to fall. That's exactly what happened. It hit the pivot. So if you're playing really short term, use the 15 and 30 minutes. It hit the pivot and then it collapsed. So you held on. Now it doesn't mean you can always sell some at the open. Of course, like I said, you got to sell a gap down. If you're short, you sell a gap down, but keep some runners going with you. So now then the market going up, then it went up a little bit, and then, So if you're following the candles on the 15 minutes, you're golden. Look at the shape of the Bollinger. The Bollingers are not just lines that are coming from nowhere. They're giving you an idea of the underlying trend for that time frame. So right now it's giving you it's a picture of the Bollingers creeping up. Yes or no? Am I making this up? Can you guys see this? Can you guys see this?
Yes.
Yes.
Good.
Yes.
Remember, it's not what I teach and the time that I spend with you guys. It's what you guys comprehend. So the Bollingers are now creeping up on the 15 minutes. On the 15-minute level, look at the slow stochastics getting overbought, but with the mouth, what we call a open mouth here. Look at that. The stochastic D, I mean the percentage D and the stochastic percentage K are not, at least for now, they're still trending up. Now this is on a short-term 15-minute basis. Remember what I showed you on the hourly basis. They're just crossing over. On the 15-minute, they're getting overbought. So on the 15-minute, the market's overbought. So what does that mean? That means that after hours, that's another day story. The market could basically reset and do all that stuff after hours. Or we might open up and we might be overbought in the 15 minutes. Who cares if you're in a swing trade? I don't. Because when you switch this down to, when you switch it out to the hourly thing, it's a different story. When you switch it to a 30-minute, it's starting to get overbought. This is certainly overbought on the 30-minute. But if you're going to swing with the trade, you're going to look at hourly. We're not overbought. On the daily, we're just starting. So what is this telling you on the daily, on the slow stochastics? That if you really want to have that big trade, this is telling you that the market is not ready to, the market's going higher. But in between, you're going to get the gyrations or the volatility moves up and down to reset all the different time frames. Do you guys understand what I just said?
Yes.
I'll repeat again. The market will reset shorter time frames back and forth while continuing its trend higher. This matches with go ahead.
Can you zoom in on that last red bar there at the end of the day?
This one. Right. That's exactly what I was going to do.
Sorry.
Don't be sorry. What are you sorrying? You're the one who's getting it. Okay. This is a major reversal hammer right here. I wish I could zoom. I mean, I don't know the zoom function on this thing. And by the way, let me warn you guys, I'm still in the process of getting a complete feel of this, of the quad system, okay? Because they've put a lot of enhancements out there. But let me take a couple of lines out. Does everyone see this candle that Tom's talking about right there?
Yeah.
Yes.
Because remember one thing, every one of these candles means money. Every one of these candles either makes you happy, either wants you to be a trader and make some real money and make this as somewhat of a career, or makes you want to just fall over your chair and jump over your table. I'm telling you right now, because I've been there, I still get there, and I know exactly how it feels. So if you guys think that you want to do this on a real successful way, you got to understand these candles big time. These are the candles you want to sleep with. Well, no pun intended. Okay, dead serious. Okay, so that reversal candle that Mr. Gans here, okay, just highlighted, is a powerful candle. This is a reversal candle, and guess where it hit? It hit exactly my downtrend line, and that's the reason why you move back to the hourly and you don't see the reversal candle. How funny is that? So you basically go daily and you look and you say, okay, we are overbought on the daily. We hit that downtrend line. So there's two things that can happen. One, this downtrend line is such a powerful force that the market basically can't go anywhere. It can happen. It can happen. It just falls apart and goes right to the bottom of the Bollinger, which then creates a massive buying opportunity. Correct? 2000? It's a big buying opportunity. Okay? Or this reversal candle that you're looking at, that's why big screens are so important. I couldn't do this on a small screens. Is that it breaks out and goes to the first resistance level at 2080, and then it hits the upper end of the Bollinger that's at 2105. Now, we don't know whether that stuff is going to happen. All I'm saying is they're right there in the charts. Looking at the slow stochastics, the market's telling us it wants to go higher because you don't get into these overbought conditions where the market falls till you get large overbought. This one was a longer term overbought. This was a short term overbought, but you need to get overbought. It's really simple as that. Train your eyes. So I don't think the market's ready to croak yet. But does it not mean that the market can reset a little bit and this thing can come down 100 points before it moves higher? Absolutely. And that's where all these multiple market structure patterns that I keep on talking about, dragon bullish, market structure low, all that stuff comes into play. That's why this business is always learning. You have to basically put a lot of stuff together in order to understand what is happening. I do 80% of the job. You need to do 20% of the job. And that is keep your eyes open, not ask me where my charts are posted and all kinds of that type of, questions. So, okay.
Can I ask one more question?
Of course you can.
On some of the charts, when the green and red lines, they start to either expand or contract on the far right-hand side. How do you work with that?
Okay, so let's do this. Okay, that's going to go into next. I'm going to start pulling up my charts that I've already posted. Let's talk about real things that have happened. Fair enough, Tom?
Absolutely.
Okay, good. All right. So I am going to do this. 1 second, I'm trying to drag it from out the screen. Okay, so we're going to look at multiple charts here. So this is the one. What happened here? Bear with me. Okay, so this is the one that I drew at the end of the day. Forecast, right? So that's a gap fill. That's why it looks like a gap. We haven't hit the resistance line yet. This is the actual pivot line. This is my line that I drew. I know it can be a little bit confusing at times. I'll try to put it in a different color. But that's, so this chart is pretty easy to understand. This was put in at what time was it? At 4:26 p.m. when it was posted. So it was the closing view. This was the closing view. Okay, showing where I think the market might go based on my pattern, which is also very important to keep in mind. Can somebody tell me what pattern we're looking at here? This is the inverted head and shoulder. You have a head, you have a left shoulder, you have a right shoulder. Isn't it amazing how they just come down to the same levels and bounce? That's what machines do. It's a machine-driven market. This is your left shoulder. This is your right shoulder. I had called 2040. We never got to 2040. We got to about 2044, correct? So now that we have this, is it possible that it does this? Yes, because that completes the first intermediate pattern. Can everyone see this?
Yep.
Yes.
Yes.
Always learning. Did you see this?
Yes, I do.
And at the end of this session, which is going on and on, I'm going to basically revert you back to that gentleman, surinotes.com, where you need to memorize those frigging patterns and look at them. Show them to anyone you want and say, listen, I'm in love with these patterns, Go to Bloomingdale's, go to Bergdorf and buy me this pattern. I mean, seriously, okay? Just what you got to do. You got to memorize these patterns. I don't spend enough time studying patterns because I'm so used to looking at it, right? I should. Patterns always replicate themselves. So this is the simplest one. This is a head. This is a left shoulder. This is a right shoulder. And in a environment that we're in, wouldn't be surprised one bit that look, because once it broke this and it broke the downtrend line, I said that on my video cast too. We're going to fall very quickly towards this 2000 level, in my opinion. because there's nothing between here and here. And that creates a massive triple bottom where the room is so dead silent, I could drop a Chinese firecracker, nobody would answer. I could start calling people names, nobody would answer because they'd be so scared shit. Excuse my French. Isn't that what happens in the room? Either they're too sad because they didn't take the trade, or they're just so frigging scared they don't want to act. This is what happens. It's laughable, but it's true. So the point is that this would be a massive buying opportunity, a massive triple bottom. But what I'm saying here, this is the head and shoulders pattern, which in my opinion gets resolved at around the 2080 level. Now going from 2060 to 2080, where we are, or 2056, we're talking about another 150 to 160 points, possibly 200 points. And that would basically create another move down here to 2060. That's called range trading. So I'm going to move to the next chart. Tom, that's good?
Kind of.
Okay, so which one? Okay, so you wanted.
I was talking about the resistance and support, the pivot lines. You know how sometimes you put the chart up and you'll see the green going up and the red heading down, almost.
Yes,
like in a
yes.
curve.
I'm trying to get to one of those charts. Yeah, I understand.
Okay.
Where I talk
That's
about
fine.
how they are stretching out.
Yes.
Okay, so on that note, let me switch my screen. And it's going to take you guys about a couple of seconds to refresh. So hold on. Let me know when that shows up.
Right there.
There it is.
Does everyone have it?
Yes.
Okay. So this is what Tom was swimming the market was insisting on. A man who thinks. Okay. So of course you do. You're a frigging engineer. Oh, just kidding. But so you look at these pivots here. I mean, sorry, you look at this resistance line. I didn't do these. I didn't take a rubber band and push them out. Look at them. They're just dying to go higher. I'm just trying to follow them. So this is Google. Now remember, these lines are not doing this because some technician is sitting there tweaking the things. It's doing that because there's so much buying pressure. Because all these idiot fund managers who never bought Google off this massive reversal candle down here are now chasing the stock up here. It's the way they never bought here and they chased here. That includes many of you.
So how do you use those lines?
So the way I use those lines is they're telling me in simplest terms that the stock wants to go higher. So if you really want to, this stock is going to 791. That's how I use the lines.
Okay.
That's it. Because and the other way I use the lines is I also start to see whether or not the underlying support lines are starting to turn. And you can notice, Tom, that they are starting to curve up. See that?
Yes.
Because what happened here was the move was so ferocious. It's actually not that ferocious. It's only 30 points. But still, you know, that everything on the upside is getting stretched out. So when you look at this in answer to your question, it's a big positive. In other words, stick to the trade.
So when you start seeing it, you know, moving up.
So let me finish. So even if it falls to 776, let's say you wake up tomorrow morning and this stock is down to 776, right? And everybody's freaking out there. It means nothing. It simply means it is testing the next resistance level, while lower at this point it's a support level, and it's going to bounce from here. Let me point out one thing here. What happened to Google today? The stock opened strongly higher, right? What happened by 10:30? Can anyone remember?
I wasn't watching Google.
Okay, so the stock was only up.
It dropped.
It was up 2. Okay, it was up 2. This was what's today? Monday, right? So let me do the 5 minutes. So Monday starts off here. Monday starts off here. Here's good old Monday. Google gaps up. I'm feeling good. Like, oh wow, you know, I'm a genius. Just kidding. Okay. I knew Google wasn't going to go down because futures were down about 11.50. Google was down 41 cents. You can do that on your iPhone. Just check it. So anyway, so Google opens up and then goes, and look at this robotic sell. At that point, Google is only up $2 from the close of Thursday. Only up $2.40. So let me ask you a question. If you are a complete flippant scalp trader, which many people are, and there's nothing wrong with it. I'm sometimes too, but only with indices, not with stocks. I like to stick with the trade, long or short. So here it's only up $2. If you were watching this, okay, right there, you notice that that was a total reset, and that the stock, the way you looked at it was at that point, unless the stock really, at this point, this is the point where the stock gets deep oversold. Yes? People understand that?
Yes.
That's around 10:40. That's around 10:45 a.m., ladies and gentlemen. At that point, if you were long the stock and you didn't sell it here, okay, or you sold a little bit. I always sell a little bit. When you open like that, I mean, come on, and it jets up like that. I mean, you got to take some off. You know what I'm saying? So let's say you took some off, but you kept a bunch of it in. And then at this point, you're just like, holy shit. I mean, what a stupid move, You're doing that Monty Python movie routine, like, oh, no, I'm so stupid kind of routine. Well, if you just followed the internals, is this the time to sell when something is this deep oversold? No. But that's what people do. That's what people do, because those voices in your head said, "Oh my God, it's over! I can't believe I did this. I should have sold everything up here. I mean, I'm so idiot. I just can't believe this." No. So you hold your breath and you see what is going on here. And when that little turn comes, you add aggressively, because you could have bought that stock down up only 2 points. The stock was up 16 points, correct? Wasn't Google up 16 points? Can somebody tell me?
Yes, it was.
Right. So up 2, so you could have made 14 frigging points. Forget options. You could have bought 100 shares on your, if you put a day trading account. Whatever the case may be. So you never do these things. Believe me, I've been there, I know. Remember, the bigger your position, the more scared you get. If you got 20 contracts of S&P call it at $12 and it's at 5, you don't feel good about it. But that's the point of maximum aggression, okay? But then when you sell it at 23, well, you know where it goes. So I'm just saying, I'm giving you a hypothetical example, that the bigger the amount of money that you have in a particular trade, the more stupider you'll get. And maybe that's why Justin Bieber is so stupid, because he doesn't give a shit. Okay? Because the more money you have in a particular trade, listen to this, you will do the more stupid things. Have a moderate amount of money in a trade so you can remain normal. If you have all your account in one trade, trust me, you will pull a lot of those casualties that happened in our fantastic community over the past couple of weeks, where we had a bunch of dropouts because they just said, "Oh, this market really sucks, I'm getting out." It's not the market. You suck. Okay? So that's what happens. So don't go that overboard. Doesn't matter how lucrative the trade gets. The only times to get really aggressive, to be honest with you, is when the market gets into those deep oversold conditions like we saw just about a week or 10 days ago. That's when you want to get aggressive. But at that point, everyone's so frozen, they don't do anything. They always wait for that perfect moment. So, it's the same thing. So anyway, so what I'm getting at is that if you follow these basic stochastics on especially the fast stochastics on the trading side, you will be well served. So let me move on to a different one. Pulling it out. Okay, let's take a look at VRX, the chart that I posted this afternoon, right? This was a very profitable trade, I'm trying to pull this on my screen. Hold on. There's so many things to learn about this business, but believe me, it's all so like normal, as in. Okay, so how do I draw this chart? Like, if somebody's looking at it, say, "Oh, I don't understand the lines." Well, if you don't understand the lines, well, try to understand the lines. It's very simple. The way I drew this line, here's the upper gap. That's why this red line is here. Here is the lower Bollinger. That's why this line is here. Here is the lower gap. That's why this line is here. I drew a channel, which you can do yourself. Guess what? The lower end of this channel coincides with the lower end of the Bollinger. Right now, the stock could very easily slip $3 to $99. Mr. Pearson, who's the CEO of Think, has severe pneumonia and he's in hospital. I'm thinking like a robot. He's the one who basically created the whole mess with Valiant. Don't you think that some people might think that his illness will have him removed from the board and the CEO position, and maybe somebody else takes over? Think outside the box. This stock will bounce. Your favorite Goldman Sachs analyst won't tell you that because he's already buying the stock. And he'll put a buy recommendation in the stock probably around these levels. And the stock's going to literally go all the way up here, a $14 move, and you'll sit there and say, why the heck didn't I buy it? That's it. Lower Bollinger. Okay, this is algo stuff. Deep oversold conditions. Remember, you can't go below 0 on the RSI. You're at 3.69. Yeah, you can kind of bounce around the bottom. The whole VRX trade that I've done over the past month or two, or month or so, has been purely of this algo HFT platform. And people who have followed me on that trade know very well. That's it. So at this point, lower Bollinger is a maximum, is the most lucrative buying opportunity. Lower gap would be fantastic. Don't know if we get there. Because let's think about it here from a fundamental basis. Whether Mr. Pearson stays in his illness stage, I should say, for the next few months or so, really doesn't mean a hill of beans, honestly. Because the board will nominate somebody else who is equally, if not better, proficient in running the company. And after all, this man carries a baggage of taking a stock from $300 down to $60. Yes? That's it. So this is a nice tactical trade that I showed you. There's a gap fill. That's why it's a gap. Here's upper end of the channel. And then, of course, the most powerful move would be the upper Bollinger. End of story. Not that hard to understand. Use your brain. Now, let's look at another one. These
Netflix.
are... Yes. One second. Let me get to it. Netflix. Let me look for it. Do I don't have the Netflix chart on this one from today, right? So I will have to bear with me. Netflix. Bingo, it was already there. Who is that, Savvy?
Yes, sir.
Okay, here we go, buddy. Draw the downtrend line, and let me show you how to change colors. So your brain registers it as a downtrend line, not yours, I mean in general. So you go color. This is really difficult stuff, guys, okay? Line. Red line. Look at this. This is a given. I mean, almost a given. Nothing's a given in the market. Upper Bollinger is 119. Retest of the downtrend line, which is almost almost mandatory for these type of high momentum stocks, regardless of what the pundits are saying, is 121. Lower end of the Bollinger is 115. stock is overbought on an hourly level. However, let me put in the slow stochastics, which keeps you in the trade. Is telling you that the stock is about to get overbought, but not quite. In other words, the most is 119 is important, and over 119 it's going to be. So what you do is you draw. So what I did was I drew the horizontal line. I went to draw horizontal line, put it here, and look at that. Over 119, the stock's going to make a beeline for 121. If it breaks 121, all hell breaks loose. At that point, you do this. There. You want to draw a support line. You take the horizontal line. You go here. You say color. Bingo. All of a sudden, this naked chart takes a life of its own. And you can clearly see here, at least from a pattern symmetry standpoint, that you have a significant reversal that's similar to here. Forget this one. And that if you're playing short-term options, you got 2 points on that, which means options are a double. So that's Netflix. Now, does that see how these things are constructed? So this to me is a bullish chart because you're seeing a pattern flow like this. Okay? No one's saying it's going to go like this. I'm certainly not saying that. What I'm basically saying is it's going to get towards that level, it's going to hit that, and then it's going to move from there. Now, let me do this. So shorter term, upper Bollinger is what you're focusing on, Savvy, okay? That's what you're focusing on looking at the stock. And then you're following this, and then remember, this doesn't just go up here and then crash. This can do this. It can just stay. In the case of Netflix, that's probably what it's going to do. The only thing that keeps me from like really going hog-wild over Netflix is I keep on hearing a bunch of reasonably skeptical commentary from some big shot guys who covered Netflix. But I don't think that makes a big difference for that stock. Let me just pull up Apple. Okay, so this is what I would. Yeah, so I was looking at Apple today, and this looks to be pretty constructive. It's coming off some deep oversold conditions. It's all a tactic. It's all range-bound trading, right? No one's asking for the moon, like whatever. Best case scenario is hitting, from 106. It'd be nice if it takes out the downtrend line here. Takes out this. I don't have the pivots on this one. To be honest with you, I have the Fibonacci retracements, which I use time to time. And on the Fibonacci retracements, generally a 50% retracement is what these all these powerful stocks do. That completes a pattern, and that's 113. Now the stock's at 107. It closed around what? 106, guys? Where it close at?
106.82.
So let's call it 107. So 7 points on the stock on a swing trade is worth a lot of money. A lot, depending on the size of the trades you take. Apple's always a choppy stock for reasons I've explained many times before. It's completely run by machines, whatever the case may be. But it is, in my opinion, 105.50 around that level. And I did post that too. 105, 105.50. 105.50 is a definitive floor. Okay? For now. So you go by that. Okay? So you go by that. Let's pick another one. This was drawn at 12:24. Hey, this is a good one. At 109. This was right after the market closed, Christmas Eve. That's why it's so important that regardless of what you're doing, I don't care, you get that drink, just for 15 minutes, for the heck of it, just scroll through all the charts that I posted during the day. I post a decent amount, but not hundreds. That's going to take you 9 hours. And your wife or your girlfriend or your boyfriend or your husband is going to kick you out. But do it. Because if you saw this, To me, it meant a lot. And it should mean the same thing to you. That's the whole purpose of me running the service. I want you guys to, benefit from these powerful formations. This was right at the close or right after the close. Hourly chart. I even put spinning top naked bar, so you didn't have to figure out what this candle was. Exactly similar to this. I put an arrow. I can't get any easier than this. To one with other, guess what the market came to? Didn't the market close this gap today? Or close to it? Yes or no?
Yes.
There you go. So if you had 20 million in the market and you hired me as your guy to trade your money, you would be basically naming your next dog after me. Okay. Forget kids, all right? I'm dead serious. Serious stuff. And this is not the first time I've done this. All right? So this is what happened today. And now this is what's going to happen. We're going to go to 2080. Either that or we're going to fail at the downtrend line and create another low. And of course, if that breaks, we always have to have contingency plans, right? So if we break the 2040 level, well, then we have, then we got some room to fall here, in my opinion. Oh, well, we have this downtrend line again to retest. There's always, levels. However, if we break this uptrend line, which is over 2055 or whatever it is, it's going to go. All right? So that's it. So this is pretty clear. This is pretty clear. So I'm going to scroll through a couple of charts. I'm going to wrap it up. Let me see here. This is from the 23rd. I called it Santa's Revenge, right? Yeah, that's what I named that chart. This was 2:46 p.m. The time is always here, right? 2:46 to the 23rd. Couldn't get any better than this. It hit the downtrend line. And I said, you know what? That's where the market's going to fail. I said that repeated times. Yes, we could have gone up to 2080. We didn't. But there was a possibility we did that. I was ready for it. This V-shaped formation. This is the way markets work. But we failed here. Then we came down to 2040. And now we're going to attempt to get there. Again, left shoulder, right shoulder, head intact. So I don't care what these bozos talk to you about and who you listen to and what you read. This is what the market's going to do. And if we fail this, then that's a different story. So I'm just going to sort of recap a few things, all right? These are very powerful charts. When you look at these patterns, okay? Said, oh yeah, it happened. The three words that I hate ever, and I'm talking to myself here, is maybe next time. I really hate those words. Guys, I can't even tell you. Trading's serious business. It's fun. It's exciting. It keeps you on the edge. It's like New York. All right? Imagine if Wall Street was based in San Diego. Holy crap. We'd be trading in like every trade would go off every 90 minutes. Everybody would be so friggin' relaxed. This is not a game of relaxation. You need to be firm. You need to be decisive. You need to be quick. You don't need to be like flippant, like, oh, every 5 minutes, do this and that. I'm not a scalper. I'm not like a crazy day trader. I do take advantage of movements in the market intraday. But my service is not designed for guys who are basically, meth-addicted scalp traders. It's not. If you want to scalp trade and stuff, that's fine. There's nothing wrong with it. But if that's your MO, your modus operandi in doing business, you're never going to make the real money. Saying all that, it's tough. I use all the tools in my hand. The reason I spend this time showing people about these charts, and I will have further lessons, sessions on this, is because it's powerful. You could literally trade the whole market and your stocks that you trade um, off these algo HFT charts, because these candles flipping red, green, and the patterns and off the pivots and off the gaps and off this and that do matter a lot. And I do realize they act differently than the other charts. The Thinkorswim charts are also very powerful. They're easier to see patterns. Here, you see more movements. With the other ones, you actually start to see patterns. And in these ones, they're more, like I said, you got to see when the candle turns from being like this to red, you know you're into money if you're on the short side. This is where I call the inflection points in the market. Some people have said, like, man, these are so accurate. How do you do it? What do you think I do? I just sit there and like, oh, light bulb goes off, and I said, oh yeah, I'm tracking a whole different set of things. I'm also processing a lot of important information that's coming out of the news flow, the environment in the market, and then applying this. And I'm seeing it. I'm applying this, the internals, I'm applying this. I'm trying to figure out, and never forget, there is always an element of risk. So if you don't think there's ever risk and you're going to be right every single time, well, then you're being completely stupid. There's always risk. And there's always that gut instinct. And that's something you'll develop over time. So that's all I got to say. So I'll take a question or two, and then I'm going to wrap up. I got like 15 more minutes. So it'll be 2 hours to dot for this, for this session. So go ahead, shoot out any question you want. Anyone?
Frank, can we look at the BXLT chart? I'm kind of following you.
Yeah, BXLT, I'll be very honest with you. BXLT is a pure spec play on the Shire takeover. So we'll take a look at the chart. Yeah, that's it. I am not trading it on technicals, to be honest with you.
Okay.
But I did look at it today. And I will show it to you again. But I just want to make it clear, and it's a very good point that you brought up, that stocks trade on different types of things. So certain stocks will trade on pure momentum, and certain stocks will basically, oops, 1 second. Let me just pull it up here. So let me just put, so I have a bunch of those calls because they're pretty cheap. And I left it in there because if it happens, it happens, right? And if it doesn't happen, right, I'll be like, Baxalta who? And that's how a trader has to think, which brings me to a certain point. I want people to realize, do not ever fall in love with the company. Okay, never, ever. They don't know you. They don't give a crap about you. And you know what? It's like your first boyfriend or girlfriend. They don't care about you. Okay, it's over. It's done. You had fun. It's over. So the point is that the way I draw this chart is this, Mark. I like the chart.
Yeah.
I think it's trading in a mechanical form. The hourly is deep oversold. Looking at the daily, it's doing fine. It's just hovering there. I don't particularly like this candle, but then the stock moves in small increments, so it's okay. The only real collapse on the stock would be a drop down to the lower Bollinger. This candle on the daily is not necessarily very nice, but it's not necessarily that bad either. Looking at this chart here, where's the volume? 1 second. Okay, low volume, that's another thing that I'll look at, and I'll cover that in the next session. When you look at certain pullbacks, you always have to also match the volume. If the pullback's happening on large volume, then obviously you need to think about it a little bit. But the pullback's happening on very light volume, as you can see here. See that? The average daily volume on the stock is about 545,000 shares. I'm sorry, 5.4 million. Yeah, so 5 million here. Look at this here, tiny, visual, just small. At this point, optimal buy again would be 38. I added more today. And I'm looking at the hourly, and that's looking okay. Lower end of the Bollinger, looking good down here. Oversold, ready to go. So a quick spurt up would bring it 40. I personally think that the buyout's probably going to be in the $45 range. So that's what we're playing at, you know. And
Okay.
yep. So that's the answer to your question, Mark. Okay.
Okay. Thank you.
No problem. Anyone else? No one? I'll show you the last one is which I haven't really looked at today, believe it or not, is the IWM. Keep in mind that I was dead right on oil, hitting 38, pulling back, and now oil's going to rise again. I put that chart out there too. So that's part of your little homework in looking at that. Is at this point, IWM is looking pretty damn good to about 115.28. All clear on this side. Very nice here. Very nice there. On the hourly, on the daily, the RUT IWM is got some mixed signals, but the swing traders who are looking to hold it for the next 30 day, next 2 weeks to 3 weeks, going into the second part of January, should expect to see a move up towards 116, and then a powerful move up, if possible, to 120, in which case your RUT IWM calls would be good for triple-digit returns, which we kind of like throw away these days, but those are pretty big numbers. So that's it. All right, guys. Amazon. Yes, fuck. Hold on one second. Amazon is, what can I say? This stock is just, it's a powerhouse. I mean, I have a whole bunch of charts on Amazon out there. At this point, it's a pinch Bollinger on the daily. In my opinion, the stock breaks out to 700 plus. On the 1 hour basis here, the stock is, it's just, what can I say? Right now, ISIS is on the run because we're bombing the crap out of them. I think we're actually gaining a lot of ground. Well, that's what the bears are doing right now in Amazon. Okay, they're just literally shit scared because the JDAMs are dropping fast. The bulls are heavy on it. Amazon is good for $682 to $700 for swing traders. Right up here. These are all powerful moves here. You can see that stretch. When you see a Bollinger stretch up like that, it's big. Overbought for sure, but any type of pullback is a buying opportunity. This is way powerful. You notice that it just doesn't want to, just going. Let's take a look at weekly. Weekly tells you if you really want to sound smart somewhere with whoever you're with or at a party, you can say, where do you think Amazon's going? Well, just look at this and just go, oh, well, Amazon's going to 730. I'm pretty confident about that. And guess what? When it gets to 730, send me more money, okay? How about that? Because it is going to go to 730. End of story. So that's it. So these charts actually show you places where things go. Where a lot of the times they said, the stock's going to go here and there, and guess what? Because I'm looking at specifically the Algo HFT charts, and of course drawing my lines and all that stuff on the other charts, but that's where it's going. The upper end of the Bollinger on a swing trade, whether it be a month or 2 months or sooner, in my case, it's probably going to be sooner. You're talking about 720 on Amazon. Okay. All right, guys, listen, it was fantastic. I'm sad that we couldn't all hang around and have a drink together. But do me one favor, and I'm telling you this right now. We had a couple of casualties over the last 2 weeks. Okay, poor souls. I don't blame them. Market's volatile. They don't want to work hard. They don't want to, join my group sessions and do all that stuff. They want to save $20 for losing 2,000. That's all fine with me. It's great. That's what people do in their real life, right? So the point is, sorry about that, is get a whole bunch of new referrals. We need new blood in the system. I'm going to keep on doing what I'm doing. I know my energy and my efforts will continue. I will always be there to help my friends. And the bottom line is that just get some good referrals in. If you feel that this is I demand, I'm telling you guys straight out, if you feel this session was helpful, I do need some feedback in the testimonials sometime this week. It's very, very important because I don't go out there and market like crazy in all different formats, right? So organic marketing is what I do. So when people come into the site, they look at the testimonials, they look some feedback, good, bad, or ugly, whatever. They hear from people who are already doing what we're doing here. So please take 5 minutes. That's the least you can do for me, because the monies that you guys are paying, and some of you are not paying any monies, okay, is not doing anything for me. Trust me when I tell you that, all right, on a monthly basis. So the point is that just put out those testimonials out there, put in some, whatever you want to put. You didn't find something helpful, put it out. Not helpful, put it out there. But I do want that. And I will bug you, every one of you who attended this session, to do that. And if you don't do it, that shows that you're not a nice person. Okay? So be a nice person, all right? I'm just kidding. All right. Good night. This will be recorded and it's going to be put out there. And guys, we're going to have fun in 2016. So guys, just stay with us and keep on growing the crowd. We're going to be there because I have nowhere to go. I got to do this. I got to pay the bills and do well. Be grateful, stay humble, stay clueless. Good night, guys. Take care.
Thanks, Clue.
Anytime, brother. Bye-bye.